Hello and welcome to Making the Business Case for Sustainability, a webinar presented to you by Gobi and Ventas. Thanks for joining us today. My name is Meg Six, and I am the Solutions Specialist here at Gobi. The session today will be recorded and sent to all participants on today's call. You are welcome to share the session with anyone whom you feel may benefit. Today's session will run about 40 minutes in length, and we've left time at the end of the presentation for questions. Please feel free to use the chat feature to submit any questions during the presentation. The goal of this webinar is to help in identifying, defining, and defending the business case for sustainability in today's environment. We'll outline steps for you to take, pose questions for you to ask, and provide real-life examples on incorporating sustainable practices and ESG awareness into your business. We are very happy to include a featured presentation by Kelly Meissner, Director of Sustainability for Ventas, who will discuss the strategies and successes that have enabled Ventas to become a leader in ESG. Your presenters from Gobi will be Jason Franken, Director of Consulting at Gobi ESG, and myself. Thanks. Gobi and Ventas are pleased to present this Get Started Guide to Sustainability in Commercial Real Estate. As each company is unique, so too will each plan differ in discrete ways. The end goal, however, is universal, to manage resources in ways that maximize value for all stakeholders. Here, we will define the steps to develop a business case for sustainability at your organization and suggest questions for you to ask as part of the process. Okay. Great. The first question we'll start with is, why is it so important to identify, define, and defend the case for sustainability in today's business environment? Number one, you want to attract investors. According to a State Street Advisors report, when asked what they consider essential and important elements of ESG investments, 79% of investors cited ethical parameters and values, 78% cited positive environmental or social impacts, 77% cited a belief that ESG factors play a key role in broader financial performance. 76% cited compliance with regulations and legal requirements. Put another way, 75% of executives in investment companies think sustainability performance should be considered in investment decisions, but only 60% of corporate executives think investors care about sustainability performance, according to an MIT Sloan Management Review report from May 2017. Number two, you need to comply with requirements to ensure a healthier planet. Laws and regulations require businesses to limit emissions and waste. The emergence of new regulations and legislation aimed at curbing the effects of climate change have been so significant that the financial world is demanding that large businesses start to disclose how they are preparing. A 2016 Wall Street Journal report claimed that the Securities and Exchange Commission has seen increasing pressure from financial and government communities to develop standards for businesses to disclose their sustainability data in company filings. Since that report, investors for several major global enterprises have successfully petitioned to increase transparency into their exposure to risk from emergence of climate-focused regulations worldwide. The takeaway is clear. Businesses need to prepare to operate in this new business environment. Number three, you want to attract the best tenants and talent. Research has shown that commercial real estate businesses drive more revenue from buildings with energy efficiency certification. 1/3 of respondents to a McGraw-Hill construction survey said that they were willing to pay a premium for green retrofitted space, while a separate CoStar study of the Los Angeles commercial real estate market found that buildings with LEED and Energy Star certifications drew higher lease rates and sold at higher rates than asking price and average rates for the region. Similarly, meeting these kinds of expectations is becoming more important as millennials take over the workforce. Research from Morgan Stanley found that millennials are 2 to 3 times more likely to want to work for an organization or to work for organizations that share their values, particularly when it comes to environmental and social issues. The ability to show progress in sustainability is becoming an increasingly valuable tool in attracting and retaining top talent. Number 4, you know that there are better ways to operate. New technology, such as data automation and reporting at the building and portfolio levels, building automation systems, and energy intelligence software, provides the data you need to better control your building's operations. Portfolios that use technology provide their owners and operators with better insight into building performance, giving them the confidence to make data-driven decisions by identifying outliers and finding cost savings opportunities and capital investment projects to create efficiencies. Moreover, buildings equipped with the tools to track performance not only perform better and are able to report seamlessly, but tracking itself conveys that the building is managed better, which has a positive impact on value. All right, we'll hand it over to Jason now on the Govee team.
Great, thanks very much, Meg. So we've talked a little bit about the drivers for creating an ESG strategy. We're going to take some time now to drill into the why a little bit more, but also the how, and look at a methodology for creating and implementing these frameworks. This process involves coordinating between a number of different stakeholders, both internal and external, to identify your objectives and your opportunities, but also to identify exactly how you're going to implement these initiatives and measure success throughout the process. For today's discussion, we've broken this approach down into 7 steps, which you see here. We'll go through these one by one. It's important to note that the process is definitely not in this exact order. It is cyclical. It is definitely not a linear process to create and pursue these types of initiatives. But we'll introduce it in this way to keep the steps clearly defined for today's discussion. So step 1. Setting your goals. As with any strategy, the first thing you need to do is define clear, measurable outcomes that define what exactly success means to your organization. This step will also help to determine exactly what the level of interest is in these efforts across your entire organization and its stakeholders. When you're engaging in this first crucial step, you need to consider all your stakeholder groups, investors, shareholders, peers, etc. As part of the process of identifying your current challenges, you're also figuring out what your restraints are. What are your financial restraints? What are your deadlines or your available timelines for implementation? And again, what's the value of the effort? Who's going to recognize that value, and what value do they place on different types of initiatives? In the end, you want to make sure that you have some sort of performance-based target to define your success. This, as Meg mentioned just a few minutes ago, will help you to take that data you've been tracking and measuring and actually see where your efforts are leading you. Throughout this process of setting these goals, this will actually help you to evaluate your long-term strategy. Once you set your goals, you can start to back into those strategic pieces of your overall development of your framework. Some of the questions that you might be asking yourself as you go through this goal-setting process are listed on the screen now for you. We won't go through all these in detail, but if you're getting started with the process, these might be ones you can consider to help you create that foundation for your overall framework. The ones you see here are fairly straightforward. Again, who are your stakeholders? What are their goals? And maybe more importantly, how will you communicate with them to talk about progress and initiatives? What does a successful end result look like? Again, that critical question: how do you know when you've gotten where you want to go? And maybe even more important today, who are your peers and what are their sustainability goals? Competition in the marketplace is always a good driver, and your stakeholders and investors are going to be using these metrics to compare your organization and evaluate your progress against some of these peers. So step 2 for today, creating a budget. So in order to create a realistic, achievable budget, you're going to need to understand your organization's preferences for financing and how to align those with the goals and timelines you've already set up in step 1. If you consider these questions you see on the screen here, where is your funding coming from? What is your ROI tolerance? When do you need to see a return? Is it 1 year, 3 years, 10 years, etc.? And again, coming back to that question of value, where does your organization see the highest or the most precise measures of value? When you're thinking about that question from step 1 of what are your drivers for your returns, you'll think about those here. Are you more interested in seeing efficiency reductions to reduce your NOI across your portfolio? Or is it more important for you to find property level recognition in certifications, for example, things like Energy Star labels and LEED certifications, maybe a balance of these things. Your organization's ability to reach the goals you're setting is really hinging on your ability to create an adequate budget and keep to it. So your goals may change in order to adapt to the budget that you develop as part of this step. Step 3, evaluating opportunities. In order to create your business case effectively, you really need to understand your portfolio and its opportunities and challenges. One very impactful way to do this is to use available data. Again, something that Meg mentioned in her portion of the discussion. Using the data you have to look at your current performance helps you to identify who your top and bottom performers are across your portfolio, and then develop a very specific set of strategic initiatives to improve performance, but also to advance your sustainability goals. Again, manually managing your data is often a very involved process. Looking at your opportunities, if you're finding that you need to, or maybe I should say looking at your challenges, if you're finding that you're having trouble tracking data and getting a sense of what your baseline is, utilizing a technology platform to automate data processes for collection or validation may help to get you closer to really understanding where that baseline and where those future goals might sit. All in all, you want to be able to define your portfolio in a way that allows you to identify not only your opportunities but your gaps, so that you can close those as quickly as possible and keep your progress moving forward. As you get through those first few steps, you'll develop a good base of information that you'll need to actually start defining your ESG strategy framework. Organizations that follow these types of strategies are becoming more and more attractive to investors. Again, as we saw in the first few slides of today's discussion, these investors are recognizing that companies that perform well in these ESG initiatives also, again, tend towards strong financial performance. According to a Harvard Business Review report that looked at 200 individual studies, they saw that 90% of organizations that have or that maintain good ESG standards also saw lowered costs. 88% saw improved performance across their portfolios in terms of operations, and 80% showed that their stock price performance was positively correlated with good, continuous, sustainable practice. So to bring this back in maybe a more accessible context for today's discussion, for instance, GRESB being a program that many of you might be familiar with on the call today, that higher GRESB score creates a stronger case for investment with companies that, for a stronger case for investment than companies that have lower performance in those key KPI metrics, and especially over those organizations that completely forego having these sorts of sustainability programs altogether. The ESG framework is a balance. You're going to have a middle ground essentially between your compulsory requirements and your voluntary requirements. Many organizations voluntarily undertake quite a few environmental and social efforts, but again, you always have that governance aspect, especially in the U.S., that is compulsory. For compulsory requirements, again, based on where your assets are located and their sizes, you might have benchmarking ordinances, for example, that are city, state, or regionally specific that you're required to comply with. On the voluntary side of the scale, you may have your own certification standards or benchmarking standards that you agree to as an organization. Again, things like Energy Star, LEED, BOMA 360, and even GRESB. We'll talk about the process of sort of building teams in a bit, but depending on your property team's availability and experience, this is an area where outside consulting groups and platform tracking tools can help to streamline that process of staying in compliance with the. We, for instance, is able to track and keep on top of regulations, both existing and new, as they come online, to streamline the process of reporting and maintaining compliance over time. Balancing those with the voluntary aspects of your ESG platform will help you to develop a good, solid framework for the future. Step 5, we've identified as establishing ongoing leadership, and really here it's talking about once the framework is in place, you have to decide who is going to lead the implementation. Will your team be comprised solely of internal team members, different initiatives or tasks to an outside group? Executive buy-in is key for these types of ESG initiatives. That will be one of the biggest impacts you have on the success of your overall implementation for your sustainability business plan. As such, it's important to define who will be a part of this team and build confidence and trust amongst all those members. If we look at a potential lineup of what a team could look like, this is based on I think kind of a tried and true blend, but we recommend that a team includes, again, at least one executive representative to have that C-level buy-in. And then, again, we could get back to the idea of making sure all stakeholders are engaged. You want to have stakeholder representatives across all of your key components of your organization. These could be anything from asset management, tenant relations, investor relations, to make sure that their needs and ideas are being met. In-house team members focused on sustainability can be key and can really help to extend the engagement beyond that sort of executive thought leadership level into the property teams themselves. This could be a director of sustainability. This could be property level green teams. And then finally, outside consultants, they do often have, or offer, I should say, greater efficiencies in understanding and completing those third-party programs that represent the bedrock for so many of our comparisons in the marketplace these days. Again, things like Energy Star, LEED, and GRESB. They may be able to take some of the burden off of your in-house team and, with their more specific base of knowledge, provide a more streamlined and efficient way to proceed with your different initiatives. To engage all of your property level teams, you need to make sure that you're communicating early and often. Engaging them at the outset of the process guarantees that you're going to have greater involvement around new initiatives and inevitably move the needle even further as your program develops. You can also consider things like energy challenges or other property specific challenges to sort of give them a motivational driver and provide a foundation to, again, track and benchmark results over time across your portfolio. The sixth step is check your progress. As you see here, you're going back to the goals you set in step 1. You establish good, sound protocols for regular collection of data on all of the different initiatives you have in play. If you're able to develop or use existing tools to analyze your progress and track your progress towards your overall goals. These sort of repeated steps of plan, implement, monitor, and then back to the start. Though that cycle is going to help you to stay on track, stay on budget, and also determine halfway through the process whether or not your goals were realistic or whether they need to be reevaluated based on again, the realities of the marketplace or of your current organization's status. And finally, promoting your performance. Promoting your story and the success of your efforts to adopt ESG into your organization is a critical step and one that isn't always done as effectively as it could be, but it can yield quite a few benefits. Some of the questions you might want to be thinking about are listed here on screen. What would your reporting process look like? What are your goals for promoting your efforts internally for your own team members versus externally to the public and to other stakeholders? They may be different. What formats will you use? Are you talking about a web presence, blog posts, published reports that are released on an annual basis? And then again, how are you going to highlight those metrics that you developed in your early stages to show not only your progress, but also show what your plans are for the future? Providing these regular updates internally is going to help keep your employees on task, and help to reinforce that their efforts are actually contributing to something meaningful. And promoting externally is going to make sure that stakeholders and investors understand your position in the marketplace and make their decisions accordingly. So one last slide here around promoting performance. This table breaks down some of the anticipated benefits that may be recognized following your successful implementation cycles. It shows both the tangible and intangible benefits of ESG. Intangible benefits obviously are a little bit harder to measure directly. They get at things like tenant comfort, word of mouth recognition, etc. Private and public value metrics are relating to really who your efforts of ESG strategy will affect. Private metrics are more about the investment itself, property ownership, investors, etc., while the public metrics are really more about parties that are not directly affiliated with your efforts, such as the city your properties are located in. All of these are important to be recognizing at the end of each cycle of your implementation, but they also should be part of your goal-setting process. So when we go back to thinking about that first slide and thinking about this as a replicable cycle, make sure that you have maybe a step 7B that talks about reevaluating goals. Always make sure you're going back to the start of your process and make sure that your program continues to be effective over time. Okay, so at this point, we're going to turn the conversation over to Kelly Meissner, Director of Sustainability at Ventas.
Thank you, Jason. Hello, everyone. I'm Kelly Meissner, as Jason mentioned, Director of Sustainability for Ventas. I've been at Ventas for about 7 years. I started off in our acquisitions group doing underwriting for all different types of investments. I did a couple of years in asset management, and then we created this position, Director of Sustainability, at the end of 2016, which I was excited about and had the opportunity to take on. A little bit about Ventas. We are a publicly traded real estate investment trust, or REIT. We invest in healthcare real estate, so we are a capital provider to leading senior living, health and healthcare providers, life science and innovation institutions, and health systems. We have a portfolio of more than 1,200 properties in the U.S., Canada, and the U.K., and we have a very long track record of consistent growth and income. We've achieved a compound annual total shareholder return of more than 20% since 2000 and provided an annual dividend per share growth of 8% since 2001. We have about $2 billion in annual net operating income, and you can see how it's broken out across the different business segments in the chart. So turning to ESG, building a little bit on the business case that Meg talked through, we are starting to see increased interest from institutional investors on ESG. Historically, it was really European investors that were nudging us on this topic, but we're starting to see more questions from U.S. investors. They're asking us about our overall ESG strategy, the environmental impact of our business, gender diversity, governance policies. And in general, you're starting to see investment managers, established investment managers such as State Street and BlackRock, that are really advocating for ESG. BlackRock recently said that they're planning to double the size of their investment stewardship team over the next 3 years. And Larry Fink, the chairman and CEO of BlackRock, in his annual letter to CEOs this year, the letter was overall focused on ESG, and he said, a company's ability to manage environmental, social, and governance matters demonstrates the leadership and good governance that is so essential to sustainable growth, which is why we are increasingly integrating these issues into our investment process. So I'll talk a little bit about how Ventas has approached ESG, which, while we have been strategic about it, it certainly hasn't been linear, as Jason mentioned. As I said, we initially had a lot of interest from our European shareholders, and they nudged us to participate in the GRESB and CDP surveys, and we started responding to those in 2012. And those surveys, while they are a lot of work, I'm sure a lot of you have participated in those, they're a lot of work, but they also have been incredibly valuable sources of information. They help us understand where we're doing well on ESG initiatives and also where we have areas that we can improve. They give us great benchmarking data that we use to understand how we perform against our peers, and have also helped us nudge us to get our data collection going on energy, water, and waste collection. And another way that we've looked at ESG is to look for win-wins. So for example, on the environmental side, we look for accretive investments that reduce energy or water in our portfolio, such as LED retrofits. On social initiatives, we look for ways that these initiatives will also improve employee engagement and retention. So we do an annual employee engagement survey, and we use the results from that to implement initiatives that are going to maintain our high retention rates. We also have a large employee-directed charitable giving program. And then we take the work that we're doing on ESG and market it. And this information appeals to a broad audience. Our investors want to know about it. Current and potential employees want to know about it. And our HR folks are always saying that millennials are asking about ESG and wanting to know what companies are doing on this front. And our business partners and service providers are also interested in this. So a few things that have been critical to our ability to succeed in ESG, and some of this dovetails with what Jason talked about. We've been fortunate to have a CEO, Debbie Cafaro, who's been a vocal supporter of ESG. But even with that, it's critical for any initiative that I'm trying to do or initiatives that we're trying to do as a company to get buy-in from the rest of the leadership team and from the company as a whole. So similar to what Jason and Meg talked about, it's always necessary to define a business case for any ESG initiative. So you have to be able to articulate what exactly it is you want to do, why you want to do it, who is going to be involved from your organization, both internal resources, any outside resources you might need, the cost, and then also what's the timeline for what you're trying to do and how does it overlay with other initiatives that are going on at the company, such as quarterly earnings or other initiatives that you have going on. One of the things I love about this role in sustainability is that I get to work across the organization. I work with acquisitions, asset management, risk management, HR, legal, marketing, accounting. I work across the entire business. And this cross-functional collaboration is really key to successfully implementing ESG. It can't be siloed. It has to really be implemented across the organization. Next on utility data, we have a large portfolio. We don't have operational control in many circumstances. So we started off focusing where we did have operational control and where we could get the data most readily. And from there, we've tried to steadily increase our data coverage every year with a goal of ultimately getting to 100% coverage someday. And we've also relied on third-party resources. So we've obviously partnered with Gobi. They help us aggregate and analyze our data both for internal purposes and also for reporting to ESG surveys such as GRESB and CDP. Public disclosure is another area that's been getting increased attention recently. Many ESG surveys only use publicly disclosed data. They're going out there and scraping data that they can find on your company. So it's on you to figure out, to make sure that they can access correct data and the most up-to-date data. GRESB added a public disclosure component for the first time last year. We have not historically done a sustainability report, which is one resource that can be used for this information, but we've used our website really effectively to share what we're doing on ESG, including posting policies, our environmental data, and highlighting case studies and stories on our ESG accomplishments. So that's a little bit about how we've tackled ESG. To talk a little bit about some of the things that we've done. On the environmental side, we have a leading sustainable portfolio with 37 LEED certified buildings and 69 Energy Star certified buildings, which is the most among our healthcare REIT peers. The LEED count includes 6 developments that are currently underway that are pursuing LEED certification, which is about over $500 million in project costs for those developments. We have long-term energy, water, and waste reduction targets that we're on track for. On the social responsibility side, in 2017, we donated about $1 million to several organizations, which was a 25% increase over 2016. And we also have a significant employee-initiated giving component, which again has the added benefit of engaging our employees and helping with retention. And on governance, which is really underpins, any successful company, we have a strong culture of ethics and integrity, which is backed by written policies, which are on our website. We have a very strong board, 90% independent directors who have a deep knowledge of all the industries that we operate in. And we have a very diverse board with 30% women on our board. And this has garnered us some accolades, which we're proud of. We were named to Fortune World's Most Admired Companies this year for the first time, and we're the only healthcare REIT on the list, which we're very excited about. We've received recognition for the gender diversity on our board. We responded to Rebecca Sam last year for the first time. That survey is used to determine who's on the Dow Jones Sustainability Index, and we were named to the index based on the results of that survey, and we ranked in the top quartile of real estate companies. Last year, we ranked first among the 3 listed healthcare real estate participants on GRES, and we were also named NAREIT's 2017 Healthcare Leader in the Light recipient. So that's a little bit about how Ventas has tackled ESG, and I'll turn it back to Gobi, and we can start the Q&A.
Awesome. Thanks, Kelly. As always, really appreciate the insight. Just one quick aside. So for everybody listening in, Lillibridge is hosting an upcoming set of special interest roundtables at the BOMA Medical Conference in Houston on May 10th. It'll be a phenomenal opportunity to hear more from the Ventas and Lillibridge teams, as well as Gobi's CEO, Chris Happ. Now we'll get back to the Q&A for the ESG strategies. The first question we have is, can you give examples of goals that align with fiduciary responsibility outside of ROI? So I'm happy to kind of jump in on this one first, and then I'm sure you two will have more to add. So I'd say initially, kind of an easy goal, and this is, I guess, sort of a simple way to summarize it, would be reporting to a body like GRES or CDP and creating transparency around how you're managing your assets, exactly what you're doing. But I think, looking at a larger framework and being able to compare yourself to your peers and make it visible to your investors is a pretty important goal and is a good catch-all for that sort of.
Yeah, and I would, this is Kelly, I would add that I think this is really the lens through which Ventas has looked at ESG is, looking at it from that win-win perspective. So what can you do in your business looking through an ESG lens that, sure, ROI projects are obvious answers, so definitely go do those. But things like employee engagement and retention and governance, those are important to run a successful business and part of your fiduciary responsibility. So what types of lessons can you take from what ESG is promoting and apply them within your business to make you more successful? So again, I think the examples that we had of, we do this employee engagement survey and we look at the results of that survey and we make changes in our business based on those results with the goal of improving our employee retention or maintaining our good retention rates. And same with governance. Obviously, if you don't have strong policies and a strong culture of ethics and integrity, your best part of your fiduciary responsibility is to maintain all of that.
Jason, anything you want to add?
Oh, well said.
Awesome. All right. Next question then. I'm just getting started with ESG. Where do I begin? Jason, do you want to take this one?
Sure, yeah. So, that's a huge question for such a small webinar. I think that, the slides that we laid out that talked about a kind of a step-by-step approach to getting the process underway, I think they do present a good framework. So if you're just getting started, really it's all about figuring out what are you trying to accomplish. The goal setting one, I talked about, some of that 7-step information on those screens being interchangeable. I think step one is always sitting down and figuring out what you're trying to accomplish. What are your goals? So I think, getting a discussion going amongst your key stakeholders is probably a good place to start. It's really up to you to decide exactly who that group would be, but I think it is critical to make sure you do have all of your key stakeholders in the room. That is one good way to not kill a process, but definitely trip it up and slow it down, is to start a goal setting process, come up with a framework, send it out and get all excited about it, and then realize, oh wait, we didn't include this person over here and they have a completely different perspective, and then have to kind of go back to, square one. So I think, planning a strategic session to sit down with those parties for, 60, 90 minutes, to go through and talk about what exactly you want your ESG strategy to result in. What sort of impact you want it to have on your public image, on your bottom line, on your internal team members, your employees, and then from there you can start to figure out how to work on the other steps of actually figuring out budgets, designing your framework, building that team, etc. It's got to start with the initial discussions to figure out where you want to go with it.
Yeah, this is Kelly. I think in an ideal world, that's where it's a great place to start. I think it can be hard, depending on your organization, to schedule a meeting that says, I'm going to get all the stakeholders in a room to talk about ESG. If you can do it, do it. But if you're not quite there yet, I think looking at your business and seeing, what's important to your business. Obviously making accretive investments is important. So what types of ESG, how can you look at it through an ESG lens for projects that reduce energy or water or waste consumption that also have a good return? And just do one small project and prove it out. I'm a huge fan of pilots. So, we'll take new ideas and technologies and test them out, with little commitments and, not having to put a lot of resources into it, and figure out what works for our portfolio, and then start to look at ways to roll it out. That's on the environmental side. I think on, social and governance, for us, I've talked a lot about our employee retention and engagement. Having engaged employees and having low turnover are really important for our business, as they are for most businesses. So things that you can do to benefit your employees also tend to improve your retention and engagement. So I think, finding things that are important to your business and then looking to ESG for ideas on how you can improve your existing operations is a good place to get started.
And I want to add too, that's a good answer, Kelly. And I don't think our two responses are mutually exclusive by any means. I think it's all a question of scale, because what Kelly was describing is more or less the same approach of, figure out where B is, you're at A, and get there. And it might be something small scale to prove a concept. You might want to bring in an expert for a day, or even to be an advisor over email to kind of help guide the conversation, figure out 2 or 3 things to do, or develop a 3-year plan, or whatever gets you going. I think that's the key, is get some momentum going and figure out where you want to wind up.
Yeah, and I would also say too, it's possible that your organization is already doing things that, are great from an ESG perspective, and it's really just a matter of marketing it and disclosing it. So, as I've had conversations throughout our organization, I've been pleasantly surprised that we're doing a lot of great things, and we just need to disclose it.
Perfect. All right. Well, that actually sort of bridges into our next question. So, how do I take the steps from a single building strategy to a portfolio-wide ESG strategy?
Sure. Well, I think, again, it kind of goes back to that question of scale, and really the concepts are the same. It's just about how you are looking at the information and figuring out how to disclose it. So if you're talking about a single building strategic initiative over a year or 5 years, in the end, you're doing several things. You're figuring out which projects you want to work on, you're finding a team to implement them, and you're tracking your results. And then when you're done, you're blasting, the ethos and letting everyone know what you did. It's the same concept for portfolio-wide approach. You just need to expand your scale. So you need to figure out a way to track your data across your entire set of assets. Finding a team member to do that, finding a software platform to do that. There are different ways to accomplish that. You need to figure out which is going to work best for you. Once you kind of have an idea of what your initiatives are going to be, it's really, again, the same process. You want to develop a plan with a budget and a timeline around implementing those measures. We go back to the slide where we talked about identifying opportunities. If you're looking at your portfolio and think of it like those bell curves, you have top and bottom performers. Your top performers are the ones that are in line immediately for things like certifications. They're more or less ready to go out of the box. They could probably get Energy Star without thinking about it if you're looking at their energy performance. Maybe LEED is really accessible, or something like BOMA Best or BOMA 360. The ones that are at the bottom end of the bell curve are the ones that need more discovery, more assessment. So those are the ones you want to start digging into with experts, doing things like energy auditing, water assessments, whatever resources you're concerned about, and figure out where your gaps are and what your opportunities are at those individual properties. When all is said and done, your portfolio-wide ESG strategy is you want to develop, a top-down framework for interacting with and improving your individual assets. So it's really just, again, an expansion of that single building strategy. In the end, you're going to come back around, take all the data you've collected, all the certification, all the accolades that Kelly mentioned in her last slide, and you're going to want to, again, shout those out to the universe and make sure everyone knows from GRES on down.
And I'd like to hear from Kelly, too, on the top-down strategy, because your portfolio is fairly varied, just with the different operators that you work with. So tell us a little bit about how you manage that.
Yeah, I was going to say, you're probably not going to be able to come up with a single solution that applies to your entire portfolio. So you have to take each piece at a time, look at it holistically and, set goals and priorities that, you want to achieve maybe portfolio-wide. But in terms of executing and implementing across your portfolio, you have to take it, one group or bunch at a time and figure out, okay, for my triple net lease buildings, how am I going to engage with the tenants and figure out those buildings? For the buildings that I operate directly, you have a little bit more control, so maybe it's a little bit easier and you can start there. Ones where you have a third-party manager, and this is what we have in our portfolio, but your relationships will be unique to your own organization. Looking at our third-party managers and figuring out how we can implement ESG strategies in that part of the portfolio, whether it's in a joint venture or not, will impact it. So you want to have goals and initiatives that you're trying to implement across your portfolio, but the actual execution of it will be specific to each segment of your portfolio.
All right, wonderful. Great. So next question. What are some additional business benefits of implementing an ESG strategy? So I actually want to kind of go back to one of the points that you made earlier, Kelly, which was sort of breaking down the silo and not having necessarily a sustainability silo, but working with every individual group. Have there been any sorts of efficiencies or even like redundancies that you've eliminated just by kind of opening up the doors and having those conversations?
I don't know about redundancies. We tend to be focused on efficiency in general. But I do think that, again, the way we look at ESG is, through the lens of being a responsible, sustainable business. And so everything that we're doing, ESG has provided good ideas for how we can improve on a lot of things that we're already doing, or disclose things that we're already doing. So for the most part, the ESG initiatives that we're implementing, part of the reason we're doing them is because they also have benefits to our business overall. That's part of the criteria that we use in evaluating ESG initiatives.
Jason, anything to add?
No, I like that answer.
All right, wonderful. So let's see, next question then. Have ESG programs been tested for ROI? Is there data, proof, statistics, etc.? So the short answer to this is yes. There are numbers. We've certainly, I think, gotten to a point with ESG as a whole where there's been enough years of solid data that we can, take a look at everything and see how it positively impacts performance. I'd say, just for everybody listening in, there's a few different studies I'd recommend taking a look at. Principal Real Estate Investors did a study recently on energy efficiency in LEED buildings that I think is worthwhile. We'll put our emails up at the end of the presentation, but feel free to, ping us, drop us a line, and we can, send that along. Otherwise, the State Street Advisors study that I mentioned earlier on in the study is a really great overview of investor attitudes towards ESG that I think is a good read as well. I don't know if there's...
The BlackRock study, too. What's that one? I can't think of it. Go ahead.
And just to add on to that, I think on the environmental side, definitely push your vendors and consultants if you're using third parties, to do projects, to do LED retrofits or water projects or whatever. Push them to prove their results to you, and that should be part of your contract with them, that they have to demonstrate the ROI for you. On the social and governance front, it's a little more difficult probably to calculate a direct ROI, but I think it's looking at the absence of having good governance or strong responsibility on the social front. Obviously, you can't operate that way. So the ROI is infinite.
Yeah, and Kelly cited Larry Fink in her slides earlier, and BlackRock annually releases a whole host of papers and letters and blog posts about the benefits of sustainable investing strategies and how to really leverage this this corner of sort of the commercial real estate market. So I think that's another good resource in general for this sort of information.
Yeah, and I mean, I talked a little bit about diversity. There have been a lot of studies, that show that companies with diverse boards perform better. Companies with diverse employee bases perform better. So yes, there are stats out there on that particular component.
Absolutely. All right. Well, we are down to our final question. So here we go. Our portfolio performance has plateaued. What can I do to start improving again? So I think this is just an interesting question in general, likely from someone who's spent a lot of time in this space. I would say the first step for getting out of a rut would be to start engaging your peers. Listening into webinars like this likely help as well. But really diving into any sort of issue or problem that you're having or, not able to get around, someone's generally experienced it before and has figured out a solution that works for them and, might be able to share that success with you. Additionally, I think there's a lot of really wonderful consultants in the space who have a very high level view on what everybody's doing and could possibly, help guide you through the space that you're in. Additionally, the market's fairly mobile, and as we take a look at everything today, we're getting beyond kind of the simple energy, water, waste, measurements and efficiencies, and looking to things like health and well-being. So maybe it's getting out of your comfort zone and pursuing either well or fit well. Jason, do you think?
Yeah, no, I agree with the getting out of your comfort zone. I think the question is interesting. It's also it is a little bit open-ended, maybe intentionally, because it depends where you're plateauing, right? If you're plateauing in the middle of the pack, then you need to sort of evaluate these things. If you're plateauing as number one in your peer group, and it's more about hitting internal goals of constant improvement, then you need to sort of take a step back and figure out what that means. I think, in addition to what Meg mentioned, especially if you're plateauing with high levels of performance, and even though you might be leading your industry group, you're still looking for that year-over-year improvement in your key metrics. I think then it is a time to start thinking about how you are advocating in the marketplace, especially, depending on where your portfolios are located, looking at the way that, again, for instance, the U.S. Marketplace approaches things like energy efficiency programs, grid modernization, programs that are really much bigger than any one organization, but which are limiting factors on how efficient you can be as a building, in a specific geographic location. So starting to look outside your walls and starting to think about how you can use the sort of credit and goodwill you've built up with all of your work in the past to start to bring that to bear on decision makers who can start to change the, people say think outside the box. You need to start talking to people who can change the box and open up the parameters so that everyone can improve, including your own organization.
All right, wonderful. Great. Well, that is the end of our webinar. On behalf of Ventas and Gobi, thank you all for sharing your time with us today. If you have any additional questions, we'll be sending out our contact information with follow-up as well as a recording of the webinar.